This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled lower on Friday and posted their steepest weekly loss in 3 months as investors weighed weak U.S. jobs data and possible timing of a Federal Reserve interest rate cut. Brent crude futures for July settled 71 cents lower, or 0.85%, to $82.96 a barrel. U.S. West Texas Intermediate crude for June fell 84 cents, or 1.06%, to $78.11 a barrel. Investors were concerned that higher-for-longer borrowing costs would curb economic growth in the U.S., the world's leading oil consumer, after the Federal Reserve decided this week to hold interest rates steady. For the week, Brent declined more than 7%, while WTI fell 6.8%.
Saudi Arabia and its allies in OPEC Plus are likely to keep oil production unchanged for a further 3 months when ministers review output allocations on June 1st. The tightening of petroleum supplies and depletion of inventories widely anticipated at the start of the year has failed to materialize so far. If OPEC Plus officials had hoped to increase production into a tightening market characterized by rising oil prices, they are likely to be frustrated. Crude stocks, futures prices and calendar spreads are all at similar levels to a year ago, making a significant increase in output unlikely.
Moving on to the top news in the energy sector.
Asian spot liquefied natural gas, LNG, prices rose this week on forecasts for higher cooling demand this summer and tracking a rally in European gas prices underpinned by supply concerns due to Middle East tensions and weakness in US feed gas demand. The average LNG price for June delivery into Northeast Asia rose to $10.40 per million British thermal units, MMBTU, from $10.20 per MMBTU in the previous week, industry sources estimated. Uncertainty over the Middle East conflict and varying U.S. feed gas rates remain a key focus of attention for traders, supporting prices at a time of otherwise bearish fundamentals, said Alex Froley, senior LNG analyst at data intelligence firm ICIS.
Mexican export cuts and a rerouting of Canadian output are shrinking already limited supplies of heavy crude in the Atlantic Basin, driving up refiners' costs with a likely knock-on effect to industries ranging from shipping and construction to Middle Eastern power plants. Prolonged OPEC supply cuts and international sanctions on Venezuela, Iran and Russia had already led to shortages of heavier crude, with the complex refineries built to process it, such as those in the U.S. Gulf, struggling to find cheap supplies. Heavy sour crudes yield more residual fuel oils that are either upgraded into higher-value road fuels or converted into marine fuels and bitumen. Next, we have the top news in metal markets. The U.S. has been preparing since 2022 for the possibility that Russian President Vladimir Putin would stop selling it nuclear power fuel, and a pending ban on Russian imports will help boost domestic capacity to process uranium fuel, the outgoing top nuclear energy official told Reuters. The U.S. Senate passed legislation on Tuesday that bans the imports from Russia, the latest move by Washington to disrupt Putin's ability to pay for the full-scale invasion of Ukraine that began in 2022. The ban, which is expected to be signed by President Joe Biden, starts 90 days after enactment. Although it allows the Department of Energy to issue waivers in case of supply concerns. The move has led to fears that Putin could retaliate by freezing exports to the U.S., boosting uranium prices. Russia supplied about 24% of the uranium used by reactors in the U.S. in 2022, and was its top foreign supplier.
Copper prices bounced on Friday, supported by a softer dollar after weak U.S. jobs data and revisions to forecasts showing diminished supply after mine disruptions. 3-month copper on the London Metal Exchange, LME, rebounded 1.5% to $9,913.50 a metric ton by 16:20 GMT after easing by 1.3% in the previous session. Copper extended gains in the European afternoon after a slide in a dollar index on the back of U.S. jobs data that came in weaker than expected.
We will now look at the top news in the agricultural sector.
The United Nations Food Agency's World Price Index rose for a second consecutive month in April as higher meat prices and small increases in vegetable oils and cereals outweighed declines in sugar and dairy products. The Food and Agriculture Organization's FAO Price Index, which tracks the most globally traded food commodities, averaged 119.1 points in April, up from a revised 118.8 points for March, the agency said on Friday. The FAO's April reading was nonetheless 7.4% below the level a year earlier. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.